Good morning, Southern California. AM 1220 KHTS host Fred Arnold on the Santa Clarita Valley Chamber of Commerce Business Spotlight. I'm joined by Jake Young. Jake Young is a mortgage professional at American Family Funding. And Jake, I want to talk to you this morning in our quick segment together about the difference between getting pre-qualified and getting pre-approved. First of all, why do you need to do either? And are you better off getting pre-qualified or pre-approved?
Yeah, hey, good question. Thanks for having me, Fred. There is a big difference between getting pre-qualified or pre-qualified and pre-approved when you go to buy a house. And so a lot of times here working in Santa Clarita, I'll have clients, prospective buyers come and talk to me about wanting to buy. And they've mentioned, well, I've been pre-qualified by another lender, I've been pre-qualified online. And so I'll try to explain to them, okay, well, you need to go probably a little bit more in depth if you want to have your offer accepted. Because right now there's a shortage of inventory if you're a first-time home buyer, or if you're perhaps a move-up home buyer, or if you're going from a condo to a townhouse, there's not a lot of inventory for a small house or a medium-sized house in Santa Clarita. And so to have your offer accepted, you should be pre-approved. And so let me explain the difference between the two. So to be pre-qualified is you're going to have a conversation with a mortgage professional. Perhaps over the phone, they'll ask you pertinent questions. For instance, how much is your income? How much do you make? What is your debt like? How much debt do you carry? Student loans, car loans, etc. And then ask some other questions. How much do you have for a down payment? And so with some of these basic elementary questions, a loan professional can let you know, well, this is approximately what you would qualify for. And this is what the approximate monthly payment would be. And this is how much house you could make an offer on.
So it's like an initial conversation.
Yeah, so it's more of a conversation.
It's a professional conversation. It's just nothing's been verified.
Correct. And so you may even have a credit report done where they'll let you know what your credit scores are, and the loan officer can see how much revolving debt, how much debts you have. However, nothing is verified. So on the pre-approval, it's the next step in. It's a deeper level, if you will. And so on the pre-approval, that loan officer is going to ask for a series of documentations to verify everything that you just talked about. So for instance, Fred, they're going to ask for stuff like recent paycheck stubs from work. They may ask for W-2s and 1099s if you're self-employed for the last 2 years. Also, it's important that loan officer is going to ask for your tax returns and a complete set of tax returns.
Now, why are the tax returns so important when you get them? Because they tell sometimes a different story.
Yeah, so great question. A lot of times with tax returns, your average person will have different write-offs. You may also have like a side business and a home business, and you'll file a Schedule C. You may have write-off expenses, unreimbursed employment expenses that you have from work.
And so those might be, we've seen these a lot with sheriffs, with equipment and mileage. You see this mileage, you see a lot.
So when you have some of these write-offs, it's important for the loan officer to analyze that, because sometimes there may be income that's not counted, and sometimes there may be losses that loan officer needs to account for, and you may not qualify for as much as you originally thought.
And the key is you don't want to have any surprises.
Right, and that's what it's all about, is going more in depth, making sure everything is analyzed, scrutinized, looked over, so that you as a consumer, you can feel confident that when you go out with a realtor, when you go to make an offer on a house, that you can feel confident that you know that pre-approval is as good as gold.
Let's talk about something that you'd written down here that I'm supposed to ask you about, and that is keys on time. And what is this keys on time that American Family Funding has that you offer that's different than some pre-approvals? Yeah,
so as mentioned, a pre-approval is when all of your income, asset documentation is reviewed and looked over. And so perhaps the next level that we offer, which is frankly unique in the mortgage business, is that we'll submit all of this paperwork not only to the loan officer, but to the next level. We'll run it up to the flagpole to somebody called an underwriter. And an underwriter is employed by the bank to give the final approval on the loan. And so,
or the mortgage bank.
Correct.
The mortgage banker.
Correct. Mm-hmm. So the underwriter will review all the documentation that the loan officer had previously looked over, and actual issue a formal approval, in essence, the final approval, Fred.
As long as there's no changes, correct? Assuming if they don't leave their job or they don't have a change in income, they're going to get the loan. But the key to that, and I think you were telling me earlier, was that it makes it so there's no loan contingency on the borrower.
Yes, it's invaluable. So you can go to write an offer on a property, and if you've gone through the keys on time, which is, again, unique to American Family Funding, that you can actually write an offer with no loan contingency.
And why is that important?
Well, it's almost the equivalent of a cash offer. So, let's look at it through an example. If you go to write an offer on a house that you wanted, and somebody's been pre-approved with another lender, and then somebody's been approved with American Family Funding through the Keys on Time program, they have already been approved by an underwriter. All the loan contingencies have been waived, and you can close in, as quickly as I've heard of 18 days, 12 days. I've had a client close in 12 days because, again, all the loan contingencies have been removed. So pretty much you need to do an appraisal, some other preliminary work, but not nearly as intensive.
Let's talk about something that's really important, Jake, and that is the expectations of what's happening in the market. They're really asking for a lot of paperwork. And why is it important that you as the consumer cooperates with this process? Simply because it seems like the pendulum's really shifted to really need a lot of paperwork to get approvals.
Yeah, Fred, sometimes frankly it feels like you need to get DNA from people,
Mm-hmm.
and I joke about that. But yeah, the pendulum has swung the other way, and frankly, it was too loose. Guidelines for lending money was too loose about 8 years ago. And so now you're really going to have to have an expectation that you're going to need to provide all of your financial paperwork. And so let me just give you an example. Besides those things like tax returns, paycheck stubs, W-2s, don't be surprised if your lender is going to ask for other things that come into play. Like if you've been divorced, you may need to provide a copy of your divorce decree, which will stipulate if you're owed alimony or child support or if you're have that obligation.
And if you're getting paid alimony and child support, sometimes they still need to prove the money's coming into your account. I mean, they all the way down the line.
Right. So things in years past, Fred, that frankly I've been asked, well, I've never had to give this before. Now all the I's have got to be dotted, the T's have got to be crossed. You just have to know that expectation and cooperate as much as you can initially up front so that you can get that loan approved and perhaps get your keys on time approval if you're looking to buy a house.
Yeah, good. So those who want to reach out to you, Jake, and get this keys on time pre-approval, how can they reach you?
My direct number is area code 661-505-4303. That's 505-4303.
And Jake at
AFFloans.com.
Jake Young, thank you very much for coming in. Appreciate it. Talking about the difference between getting pre-qualified and getting pre-approved and the keys on time guarantee from American Family Funding. Hope you enjoyed this edition of the Santa Clarita Valley Chamber of Commerce Business Spotlight. The show's Fred Arnold, in 2013 chairman of the Chamber of Commerce on AM 1220 KHTS.